Hello, hello, hello. Welcome to the Joe Luca Real Estate Show. I am Joe, and I'm your host. Every Tuesday evening, right here on WNRI 99.9 FM, 1380 on the AM dial. And you can also check us out on WNRI.com, streaming. That's right, we stream free, no commercials, if you go to WNRI.com. So if you don't have a good signal, or if you live far away, you can check us out there, and you can hear the Joe Luca Real Estate Show anywhere, indeed around the world. So thank you very much for tuning in. A little about me, in case you're just tuning in. I am a realtor, work with a company called Remax Preferred. No one in the world sells more real estate than Remax. We are number one. And that red, white, and blue balloon is something that's very recognizable. And that, among other reasons, is why I choose to work at Remax, because all the other bells and whistles aside, branding is what it's about. And if you see a Remax sign all the way down the other end of the street, you know that there's a house for sale there, whereas other companies, you can't really read their signs until you get right on top of them. So that's one of the reasons why Remax is number one. Number two is, most of our agents, we've been in the business a while. We're professionals, full-time, full-service, experienced, and we always work to educate ourselves and make us better realtors for our clients, for you, the consumer. I work with buyers and sellers primarily in Rhode Island and Massachusetts. I have partners through around the globe, in fact, because I'm a certified international property specialist. So if you're looking to buy a home or sell a home anywhere in this country or around the globe, I have partners to whom I could refer you if you're looking to do something like that. But of course, I love what I do, and working with buyers and sellers right here in southern New England is very, very rewarding. It's good for my soul, and that's one of the things that keeps me in the business, why I made the switch from the commercial side of the industry to the residential side. I still do commercial real estate, but primarily I focus on residential. It's a much more rewarding transaction when you have a first-time home buyer. Many times it may take longer to get them to the closing table, but it's very rewarding when you see how these folks are taking a step to change their lives. So the real estate market, what is going on in the market? Okay, let's look at my trusty Mortgage News Daily. That is a website that I go to every week because it's pretty arbitrary. The rate that you would get if you were talking with one of the great local lenders that I would refer you to may be a little different than this, but these are pretty general rates. So a 30-year fixed rate, which is a conventional mortgage right now, getting about a 6.88%. 30-year FHA, 6.37%. 30-year VA, 6.38%. So technically these are a smidge lower than they were yesterday, but they're about the same as they were last week. High sixes for conventional rates. Now, just for a little bit of perspective, folks, because everybody knows someone who has a rate of 2.75 on their mortgage. Those were only around for a very short period of time. The historic average for a 30-year fixed rate mortgage is 8%. Yes, 8%. I had someone, actually, they doubted it, and they just searched for average mortgage for 30 years, and they came up with, I think, 7.8. It's 8% when you're looking at a 30-year fixed rate. So that's substantially higher than where we are. And even if you have, you're not buying a single-family owner-occupied home, your rate will be higher than, let's say, the 6.88% that I'm quoting today. You might get up into that 8% range, okay? But if rates, were higher, obviously you would go higher. But if you're looking at a single-family owner-occupied home, these are the rates that you would be, the range that you'd be looking at for rates, okay? Now, why are the rates bouncing around? Because if you've listened to this show, you know that I've said how, generally speaking, mortgage interest rates respond most directly to inflation rates. Okay, and not the Fed funds rate. Now, the Fed funds, that's something that's different. That most quickly impacts short-term rates, so car loans, credit cards, things like that. Whereas a lot of times by the time the Fed announces a rate change, the mortgage market has already incorporated that change into the rates that they're offering. Okay? So these rates are pretty independent of what's going on with the with the Fed funds rate. So good news is it appears that inflation is going down, and other good news, the PPI, the Producer Price Index, okay, that number is about a half a point lower than what we were expecting. Okay, so that means that the next time the Consumer Price Index number comes out, that number will probably be lower too, because there's a lag. The producer price is what it costs to build stuff. The consumer price is what we pay for it as consumers. So that's a reason to be optimistic. Do I see mortgage interest rates, going down significantly? I say this all the time. I do not have a crystal ball. If I did, I wouldn't be selling real estate. However, I do not see rates going down. If they hit the fives, I think it's going to be the high fives. But putting that aside for a minute, I would not use speculation about what mortgage rates are going to be doing as a reason to hold off on buying a home or starting the process to buy a home. Because one thing that's been, like the sun rising every day for the past several years here in southern New England, the cost of a home has increased. Okay, the median price of a single-family home is, knocking on $500,000 year over year, and in some periods we were actually over that number. Okay, so don't delay. Okay, reach out. My number. You can reach me anytime when I'm not on the air. 401-409-5030. That's 401-409-5030, and I'll answer any questions you have. I'll send you any information you want. Even if you let me send you information, it doesn't cost you anything. We can meet in person. We can at my office. We could meet virtually. We could meet at a coffee shop. Whatever is easiest for you. That's I love what I do. I love sharing that information. That being said, I want to do a quick shout out to some of our sponsors. I'm very grateful that we have G Metz Moving and Storage. It's the best move you'll ever make. #1 movers in southern New England. G Metz. That's M as in Michael, E as in Edward, T as in Tom, Z as in Zebra, moving.com. gmetzmoving.com. You can go to that website and you can get a price for a move, or you can schedule a move at their website. I strongly advise you, when you are estimating how much stuff you have, how many boxes of things, how many pieces of furniture, don't be conservative. Because if you tell the moving company you have 25 boxes of stuff and you really have 35, 40, or 45 or 50 boxes of stuff, well, guess what? They gauge the the capacity, the number of people they're going to have working based on what you tell them. So if you give them a low number, they're going to send maybe one truck with 3 guys. If it's a higher number, now what's going to happen? It takes the same amount of time to pick up a box from the basement, carry it up the stairs, put it in the truck, and go back down and get the next box. That takes a certain amount of time. So if you have fewer guys doing it, it's going to take more time for it to happen. So the amount you're paying for moving is not going to be less. It's not going to be a lower number. So if you're paying 3 guys for 4 hours of work, or you're paying 6 guys for 2 hours of work, it's pretty close to the same thing. And everybody is going to be less stressed, because if it takes longer, and usually those are low numbers. Usually, when people underestimate, instead of it being a 4-hour job, it's a 6 or 7 or 8-hour job. And that can be problematic if you need to be out of your house so someone else can buy it. Okay, so you really could, jeopardize your transaction by not being honest with the mover. And of course, I encourage everyone to use GMETS, but whomever you call, be honest and accurate. Okay, maybe I should use the word accurate as opposed to being honest, because sometimes maybe people, they just don't know. Well, it's worth getting a pencil and paper and going out and actually calculating how much stuff you have to move. But GMETS does a good job. If you have 25 boxes or 55 boxes and furniture, they'll take good care of you. And then, of course, Compass Title and Escrow. They do a good job working with our buyers and our sellers. Okay, answering questions, identifying potential problems before they become major problems, and getting the closing to happen in an uneventful manner, which is what we want. They answer all your questions, and they do a dynamite job. That's Compass, Title, and Escrow. And of course, Vern Rainville, he is a public insurance adjuster. He's licensed by the state of Rhode Island. Okay, and he works for you, the property owner. He does not work for the insurance company. So he will work with you so that you receive all of the money that your policy entitles you to. If you only work with the insurance adjuster who works for the insurance company, guess how he or she get a bonus every year? Okay, by paying out less money. So when you see these advertisements on TV and it's some disaster-strewn area where there was a tornado or a hurricane and such insurance company, they go in right away and they'll give you a check that day on the spot. Well, it's impossible to have an accurate number for what it would cost to make you whole again. Okay, if it's fixing a leak or if it's rebuilding your home, it's worth it to take a little bit longer to get as much money as you're entitled to. And that's why you need to call Vern Rainville, 484-300-8495. Again, he's a Rhode Island guy. Even though he has a different area code, it's 484-300-8495, and Vern will get back to you within 24 hours of you leaving him a message. So please give him a call, 484-300-8495. That's Vern Rainville, Public Insurance Adjuster. So getting back to what's going on in the real estate world. By the way, if anybody would like to call in, if you have questions or you want to debate me on something, you can give me a call at 769-0600 or 1-800-949-9674, and we'll answer questions for you. So, okay, getting back to what's going on in the real estate world. I like to always revert to Lawrence Yun, the chief economist for the National Association of Realtors. You know, Lawrence is a real smart guy. He's been very accurate, and he interprets the data in a way that is realistic. Okay, he does not have any kind of an agenda. He just tells it like it is. And I want to talk to one thing, because we had a jobs report that came out about 11 days ago, and the stock market has been bouncing around, responding to tariffs, and there are a lot of different reasons why that's going to happen, why that happens. But the jobs report, what's interesting is job gains in the month of March were 228,000 job gains. More Americans chose to look for jobs, which caused the unemployment rate to tick up to 4.2%. We talked about this last week. When more people say, you know what, I'm going to go look for a job, now that registers as an unemployed person, even though last week they were sitting at home not looking for a job. They were still unemployed, but now they're actively looking. So unemployment can go up. Long term, that's good, because the labor participation rate, the percentage of people that are actually working, will go up as well. And that's something that we want. The wage growth that we experienced is 3.8%, which is this is significant, folks. This is outpacing the consumer price inflation rate, which was 2.8%. All right. Now, jobs data typically lags a little bit behind as an indicator for what's going on with the economy. Okay, so the fact that we had, and I want to point out, those 228,000 jobs that were added, why that's significant is because those jobs are private sector jobs. In the previous administration, we would have jobs being added, but the thing was, those jobs, 80% of those jobs were government jobs. Okay, so it was the federal government, state government, local government. Now the only public jobs that are getting added are primarily at the local level. Okay, so generally it is upbeat news. All right, so it's the second consecutive month of reductions in federal government jobs. Okay, that's significant. Okay, because when you work for the government pays you, the dollars go in your bank account, and that's it. Now, yes, you will spend money when you go out to eat and whatnot, but when you work for a private industry, okay, if you're working for a car dealer, a car manufacturer, in a restaurant, okay, there is more that benefits from that type of a paycheck, because it means there are other people that are working there as well. When the government collects taxes from the people, like we did today, I mailed my checks in today, and then they have to pay that money out to a government employee. It's basically kind of a redistribution of the wealth. They're taking it from over here and putting it over there. But when someone is working and they receive a pay, that's helping the economy. It's growing the economy. Okay? So it's very significant that the private sector jobs are increasing. The future direction of the economy remains a little uncertain right now because of tariff wars. Okay, and this is something that's been making people go pull their hair out on the stock market. And I have people in my office, and oh my gosh, my 401k. Listen, relax. Unless you need to get at that money right now, don't worry about it. You only lose money when you sell. Okay, and hopefully you're in the stock market for the long haul. Okay, so the tariff wars, there's a lot of uncertainty, but that's something that could turn around very quickly as well. Okay, but we'll talk about that in another moment. I just want to get back to jobs for one moment. So total payroll jobs since 2000 are 30 million higher. So we're creating more jobs in this country, but we have more people now than we did in the year 2000. Payroll job additions, 228,000 in the month of March, as I said. And that's significant because most of those jobs were private sector jobs, not public sector jobs. Okay? And the wage growth, which was 3.8%. That means people are starting to earn more money, which they haven't done for the past 4 years, is outpacing the consumer prices, which is 2.8%, as I said earlier. So the prices are going down, wages are going up. So that's something positive because it's going to make it easier for people to buy stuff. Okay? Also, job gain since pre-COVID, record high payroll employment. All right, let me just, I don't have my glasses on, so I have to make my screen bigger here. So Rhode Island, 2.4% in the positive. Massachusetts, 0.9% in the positive. Okay, that's a percent change from March of 2020 to December of 2024. Okay, so also we talked about mortgage interest rates earlier, and the mortgage interest rates right now are, as I said, you're in the sixes, the low to high sixes, and that is generally expected to continue to trend down, as is the 10-year Treasury yield. Okay, so we've got mortgage interest rates, which are, like I said, in the 6 to 7% range. That's going to be ticking down a little bit, maybe in the 6 to 6.5. So 6.5 will be the high. But that's in response to the Treasury yield for the 10-year Treasury going down as well, which is in response to inflation. Okay? So that's a little bit... not a little bit. That's significant, and that's positive. Now, I want to talk a little bit about, we were talking the economy, short-term risk, long-term gain. We're talking about real estate, houses, okay? Buy a more house, your mortgage is typically 30 years, that's a long-term proposition. We don't advise people to speculate when buying residential real estate unless you are an investor. So if you're looking to buy a home, it needs to make sense for you as a buyer, the number of bedrooms, what you can afford, your needs are as far as location, schools, if that's something you are concerned with, etc. Those are the things that should contribute to buying a home, not speculating, well, I think the prices are going to continue to go up 10%. That's not the way you want to do it. Historically, real estate is the best place to park your money, but it makes sense because if you're not a homeowner and you're a tenant, you're paying someone else's mortgage, and so essentially you're paying 100% interest when you're paying rent. When you're paying a mortgage, even if it's 10%, you're building equity in your own home. Okay? So these are things for long-term, playing the long game. Okay, short-term, that's when we see, the craziness, the responses to the tariffs. Okay, the economy in the short term isn't liking tariffs. If you look at the stock market's reaction in the near term, the higher cost on imported goods is expected to be passed on to consumers and producers, and thereby nudge up the inflation rate. So this is going to be interesting because things are starting to go down. The higher inflation may prevent the Fed and longer-term interest rates from falling meaningfully. All the while, incidentally, commercial real estate needs lower interest rates because we've talked about this, last year. Close to $1 trillion in commercial loans are coming due for refinancing in the next year. $1 trillion. So if I own a commercial building, let's say if it's a shopping plaza, and commercial loans, unlike residential loans, they come up and they get reviewed every 12, 24, 18, 36 months, whatever it is, depending on the loan. That's when the bank comes in and they say, okay, look, we've got to look at the loan and your interest rate has to go up. Or we need to call your loan in because your vacancy rate is too high. So now I have to refinance this property. I can't just give them millions of dollars. I don't have that. So now I have to refinance it. So I have to go to another lender, maybe who's not as risk averse, but that means I'm going to have to pay a higher interest rate. If I can't refinance it, I either have to sell it or the bank will foreclose on it. So the commercial real estate, we're going to put that aside because I don't want to get too caught up in the weeds on that, and that's a lot of technical stuff that I think most of my listeners are not interested in. If you have questions, you can certainly give us a call at 769-0600 or 1-800-949-9674. But so commercial financing, that whole side of the market is going to be going through some interesting challenges in the next year. Over time, however, the inflation rate is most likely going to subside because we're going to experience a steady boost in production in this country. Some of that is going to be because of tariffs. It's also going to be because of lower regulation. Okay, the government is already cutting out a lot of regulation. We're increasing domestic energy production. This could make inflation a non-issue, and the ongoing oversupply of multifamily housing unit completions will dampen rent growth. We're not seeing too much of this. We're talking national numbers. We're not seeing too much of that here, but in other parts of the country, they are really starting to increase. The number of building permits for multifamily homes has significantly increased. So that could, kind of top off the median rent that people are paying across the country. So that is something that's significant too. And getting back to, production and wages, the Honda Motor Company is going to be shifting their production to the United States. 90% of their cars are going to be made locally. Okay, they're relocating plants from Mexico and Canada to get around the Trump tariffs. So think about that. How many employees does a car factory have? It's got to be thousands, right? Not only that, but all of the other industries, small businesses, locally owned, that supply parts to the car factory, now they're going to pop up. So if it's tool makers, if it's in the electronic side of things, whatever it is, these are all little businesses that support that one factory that are going to pop up. So that's going to increase employment, and that's also going to increase wages. As people are making more money, as wages increase, it will become easier to pay for things like, houses. The price of houses has been going up significantly the past several years because of supply and demand, Economics 101. And it's been such a challenge because wages have not increased. So, you're still making the same, $5,000 a month in your household, but the cost of keeping a roof over your head has gone up 25-30% in the past 5 years. So what do? You don't go out to eat as much. You don't buy clothes as frequently. Maybe you do more shopping at a dollar store as opposed to a regular store. But as more people are working, and the people that are working, their wages are increasing at a rate that's greater than the consumer price index, than the cost of things, it's going to be easier for people to buy stuff. And they'll have more money that they can direct towards housing, towards keeping a roof over their head. Okay? So this is this is something that's good news for the economy. Okay? So that's kind of where we are with that. I want to talk about some other salient info, just interesting statistics, okay, about what's going on in the market. There's, hold on, I want to switch screens here. One of the things that is interesting, and we touched on this last week, is a huge majority of home sellers believe that they're going to get more than their asking price for their home. Why is that? I mean, is everybody looking at the same data? Okay, there's more economic uncertainty. There are some recession fears. In all honesty, I have to say that the recession fears have been parroted by some of the talking heads, and in my opinion, they aren't looking at the real data. So I don't know that we have a great chance of recession, because I think that if you look at taking a step back and touching on tariffs again, allegedly 130 countries have already gotten in the queue to negotiate tariffs with the United States. 130 countries. So if they can make an arrangement with the United States, that's going to assuage any issues regarding inflation, okay, and recession, excuse me. So, one of the things is homeowners think they're still feeling very optimistic about getting top dollar for their homes. There was a survey conducted by Realtor.com that found that 81% of potential home sellers think they will achieve their asking price or greater as the market moves into its best time to sell. Now, the best time to sell, of course, is spring. That's when there are the most home buyers out there looking at homes. Only 13% of the would-be home sellers interviewed as part of the study said they expect to get less than their asking price. A further 5% said they do not know what will happen. Okay, 1 in 7 believe that right now is a good time to list a home on the market because there is a nationwide supply gap that will take more than 7 years to close, which means the buyer demand is high. And yes, and we've talked about that. And again, I'm on the record, I think there's going to be more like a 10-year time frame to close that gap. So because of that, a lot of the home sellers think that they're going to get asking price or higher. put a pin in that for a second, because one of the reasons that home sellers don't get asking price or higher is because they typically don't listen to their realtor. And invariably, when a seller, and now this is anecdotal, but when a seller insists on a price for their home that's higher than what I suggest they sell it at, we have to have a price reduction. So we do the price reduction, and guess what? Then we get the price we asked for. Now, does that happen 100% of the time with 100% of the listing agents? No. But more often than not, that's what happens. 63% of prospective sellers said they won't have to make major or unexpected concessions. Okay. Now that's something, I just want to touch on this for a second, because the whole negotiation process has changed in the past year, because many times buyers agents and buyers, they have to have an exclusive buyer agreement signed. So the buyer knows that the seller is not required to pay the buyer agent compensation. So that means the buyer agent has to look for compensation from the buyer directly, or the buyer has to say, well, Mr. or Mrs. Seller, can you pay my buyer agent's compensation? So that's another point of discussion and negotiation that can kind of make things a little challenging. If you are a buyer, it makes a tremendous amount of sense to have an agreement where you are paying your agent's compensation, because it makes your offer more competitive. Many times there are still situations where more than one offer comes in, and if you have one offer that comes in where the buyer is asking the seller to pay the compensation for their agent, and another offer that's not asking, the seller may choose the one that's not asking for any compensation. It can be a cleaner offer. Okay. Now there are different ways to structure that and how that gets done. You can talk to your realtor. You can certainly give me a call about that regarding closing costs and things like that. And I also want to point out that the state of Rhode Island, our MLS, we have one for the whole state, and the state of Massachusetts handle this differently. In the state of Rhode Island, if the seller wants to pay something towards the buyer agent's compensation, they can, but it's not published in MLS. So when you see anything listed in MLS, it does not indicate if the seller is paying anything or is not paying anything towards the buyer agent's compensation. In Massachusetts, the seller can pay it, one, and two, the MLS can put it in, or they don't have to put it in. So sometimes you'll see listings where it says what the seller is offering to pay to the buyer's agent, and other times you won't, and other times there's nothing being offered. Okay, so there's still that whole situation is still a little bit fluid, and it's going to be so for the next probably year or two, as more lawsuits transpire. Okay, getting back to what we were talking about before regarding the home sellers who think they're going to get more than asking price. The housing market is challenging for buyers, and sellers are optimistic because they're happy that they can take advantage of the increased value of their homes. But there's a double-edged sword there, because they might have a greater value for the home they're selling, but the home that they want to buy, unless they're moving into an accessory dwelling unit with a family member, the other house is going to cost more as well. Just under 80%, this is significant, folks, of aspiring home sellers said they are considering listing their property out of necessity. So let that sink in. Almost 80% of all the homes that are listed on the market right now had to be put on the market. The top reason was looking for a different community in which to settle. Okay. 1/3 of the respondents revealed they need more space. A quarter said they have to downsize. 21 said they're looking to move for family, and 15 said they are relocating for work. Another 18% of the respondents cited a major life event, including marriage, divorce, children, as a reason to sell. Additionally, people moving into assisted living, nursing homes, death, things like that also contribute. Okay, and I don't know that I can't say that 80% of my listings in the past year have been, or anything near that, have been out of necessity. But certainly, I have sold homes where there were folks going into nursing homes, folks who died, growing family, divorces. So I haven't had, maybe I have when you look at it that way, yeah. It's a distinct minority that are selling their home just because. Okay. 1 in 10 respondents admitted that they can no longer afford their current home. Now, this happens a lot, folks, because property taxes have been going up. Insurance, homeowners insurance, has been increasing steadily across the country. And that's significant. So even if you own your home free and clear, you have no mortgage, and you're on Social Security, you have to pay your property taxes, which can be $500-600 a month. You have to pay your insurance, which could be another $300 a month. You have to pay your heat, your electricity, internet, whatever you use, telephone. Those numbers add up. It's very quick that you can get up to over $1,000 a month in expenses without having a mortgage. If you're on a fixed income, if you're making $1,500, $1,600, $1,700 a month on Social Security, you can't afford that house, even though you own it free and clear. Okay, so when you're in a situation like that, you may not have to sell your house, and we can talk about that. If you have questions, give me a call, 401-409-5030. If you forget the number, look up Joe Luca, Luca, Realtor, and you'll find me. And I've got a YouTube page, I've got a Google My Business page, I'm on Facebook, LinkedIn, Twitter, Instagram. I'm all over the place. You should be able to find me if you Google me, Joe Luca, Luca, Realtor. I'll answer any questions you have, and we can talk about things that you can do that I can help you with to actually save money if you're looking to buy a home. Okay, there have a lot of lender partners that I work with who have a lot of different mortgage options. So there may be a way that we could help you save some money over what you think it would cost to buy a home. But again, you have to give me a call, 401-409-5030. If you do want to give the show a call, 401-769-0600. That's right here at WNRI, or 1-800-949-9674 if you want to call from outside of the 401 area code. Okay, so something else I want to talk about, I want to mention too, is that, we touched on this last week or the week before when I had said how 9 million adults between the ages of 18 and 34 still live at home with their parents. That probably contributes to this statistic that 1/3 of 30-year-olds own a home today as adults delay major life milestones. All right, this is also from Realtor.com. 33% of 30-year-olds in the U.S. own a home today, down from 47% in 1984. Well, that was a lifetime ago. As the typical age of first-time home buyers continues to rise. That's from John Burns' research report. John Burns' research and consulting report, which looked at delayed life milestones, as well as the declining birth and marriage rates, and how they're affecting the housing market. Okay. Changes in family sizes and birth rates are reshaping housing demand in the United States with long-term effects for residential builders, developers, and investors. Now, if you're a builder and you're reading these trends, you may be less likely to build four-bedroom 2,500, 26, 2,700 square foot houses. Okay, because if more people, one, they're buying later, two, they're not having kids, not getting married, there may not be much demand for those big homes. The analysis highlights the fact that the typical first-time home buyer is now 38 years old, up from 33 as recently as 2020. Wow. Since 2020, the average age of a first-time home buyer increased 5 years. Now, I will submit to you, my listeners and viewers, that is probably because wages haven't increased in that time period. You know, you figure 2020, that's when we were going through COVID. People weren't working, laid off, they were getting their PPP money, not a good way to buy a home. After that, 2022, we get a new 2020, we get a new president who comes in, and we experienced 20% inflation. Wages were flat. Real wages were flat. So there wasn't much of an opportunity for folks or an enticement for people to buy a home. So I submit that is a significant reason for the increase in age for first-time home buyers. And that will be determined over the next several years. If that starts to come down as wages increase and as mortgage interest rates stay the same, and then hopefully increases in home prices will lessen, so we're not getting double-digit price increases, home values every year. I think then we'll start to see more people buy homes that are younger than 38 years old. So as a result of that, 72% of the renters in the country are now aged 30 or older. Wow, 72%. That's a huge, huge number. Shifting cultural norms, limited housing options, and the growing cost of home ownership mean that fewer would-be first-time home buyers are opting to venture into home ownership. Now, this is important. Those folks need to still focus on trying to buy a home, because home ownership is the number one way to increase your net worth and to pass on, to create generational wealth. Okay, home ownership is the number one way. Home ownership, it's not the only life milestone that is increasingly getting delayed. Among 30-year-olds today, just 70% live on their own, and 48% have been married, down from 83 and 78 in 1984. Wow, those are significant numbers. Okay, so, we've been talking about numbers in the economy and demographic numbers this week. And what does this have to do for the real estate market? All right, now, I minored in economics, so I'm not an economics scholar, but I've been around. I've been through a couple of business cycles, ups and downs, and I've observed consumer behavior, and I think I have a pretty good understanding about what the real estate market has done and will continue to do. And just kind of trying to read the tea leaves, the political tea leaves, the economy tea leaves, like kind of filtering through, the chaff. And by the chaff, I would refer to that as the headlines, all the nonsense about the stock market going up and going down and doing this and doing that and tariffs, and that's not good. Again, I don't want to bore you or, get too deep in the weeds, but tariffs do not necessarily mean that an economy is going to go down or inflation is going to go up. And we can have that debate another time, because this is not a show about economics and boring stuff like that. But I believe that these tariffs, that's just the tip of the spear, what we're starting with, okay? The first parry that we're doing, and then we're getting everybody to come to the table, and we can talk about tariffs and a lot of other things, because there are many countries that, in addition to having tariffs, they do not allow certain products from this country to even be sold in their country. For example, beef from the United States can't be sold in Canada because we had mad cow disease and whatever it was, 1990. They don't accept any beef from the United States anymore. So that's putting us at a distinct disadvantage. It's making it harder for our farmers or ranchers to get top dollar. Okay? So in addition to talking about tariffs, and tariff agreements are very complicated, very detailed, they're typically, 1,000 pages long. You have to talk about these other non-tariff issues which directly impact our economy. We talked about beef sales in Canada, but if it has something to do with anything mechanical, steel, aluminum, things like that, where there are outright bans. There are outright bans on buying some energy that we produce in other countries. We need to make sure that it's fair for us and our citizens, and not just fair for other people. And the thing that gets me about this, I'm just going to do a little side rant here, is, reading some of the statistics and what these tariffs were. Some of the countries that were charging the most usurious, I'll say it, rates were our friends, our allies, not our enemies, not our adversaries. South Korea, Japan, Canada, England, Germany. And then the European countries, we're already defending them. We support NATO. We're kicking all this money their way, and then they're still taking advantage of us when we're importing or exporting goods to their country, when they're importing goods from us. I just think that is, it kind of gets my goat. And I don't have much sympathy for these countries that are now crying poor mouth because of the tariffs that this administration is proposing. Because no one else has done this. None of and a lot of these former presidents or previous presidents, I voted for them. I had no idea they were selling us down the river. How many people knew that we were getting raped by these tariffs in other countries? You kind of figured, oh yeah, China, yeah, they'll take advantage of us. But it was our friends that were doing this to us, our allies, other countries that we helped. That's the thing that really, gets my goat. So hopefully everything will get straightened out. And again, I think that, the time frame we're looking at, I think once we get through the second quarter, I think we're going to be on firmer footing. I think we're going to, the trajectory for the economy is going to be positive. I think wages are going to continue to increase. As more companies bring their manufacturing back to the United States, that's going to increase wages. As the government stops printing money, as the government becomes more responsible with the money that we give to the government, that's going to help the economy, and that's going to prompt private sector wages to increase. As more consumers start earning more money and achieving a better lifestyle, it's going to be easier for them to buy homes, buy cars, buy new clothes, go out to eat more often. All of the things that make life more enjoyable. Okay? It doesn't matter what price point you're at, socioeconomically. If you have to get nervous about paying your bills every month, that's not enjoyable. That's a stressor that no one should have to deal with. And if the government can do their part so that we can earn more money, there are more jobs available to us, that's a great start. that's a great start. But if the government is selling us down the river and not allowing companies to open factories here, I was watching this report by John Stossel, the reporter, and China just announced they're not going to export any rare earth minerals to the United States, and that sounds terrible. Fortunately, the military and the Department of Defense and the Pentagon have a huge stockpile, so in the short term we're okay. But this is exactly the reason why we do not want to be beholden to our adversaries, and we need to onshore all of this. There was a company that was trying to open up a rare earth mine in Alaska, and they were not allowed to do so. It was vetoed twice by Biden. Now, that could be something terrible, all the wildlife that's going to be impacted. If you look at the footprint of where this proposed mine was, and you do a satellite image of all of that area, you can't even see it. There are so many trees around it. There's so much wildlife around it. These are the type of things that make life in this country more difficult than it needs to be. That would be at least 1,000 people working over there, high-paying jobs. And because we have those rare earth minerals mined in this country, it's less costly to get those rare earth minerals and put them in the computer chips and in the magnets that we use in our phones, in cars, in airplanes, in computers, and everywhere else. Okay? When we mine rare earth minerals or coal or drill for oil, we do it in a much more responsible way than they do in other countries, because that's the way we are in the United States. So when we offshore all this stuff, it's really hypocritical, because we're saying, okay, we don't want to mine for cobalt here in this country. We'll let them do it in an African country where they have 8-year-old boys mining cobalt. Whereas if we did it here, I assure you that would not be happening. Okay. Folks, we are actually plumb out of time. Thank you very much for tuning into the Joe Luca Real Estate Show this week. Stay tuned, because next up is Rick Mernier and the Old Time Preaching Ministry. Excellent show. He's got awesome bumper music in the beginning. So please tune in and listen to some good scripture with Rick Mernier. And I guarantee you that you will get something out of Rick's show that will help your week be much more spiritual. Of course, this is Holy Week. I totally forgot about that. I wanted to mention that. This is Holy Week, the holiest week in the year for Christians. Okay, we had Palm Sunday this past Sunday, and Jesus' resurrection is this coming Sunday. So please stay tuned for Rick Mernier and the Old Time Preaching Ministry. Other than that, I'll be back next week. Same bat time, same bat channel. Take care, everybody. Bye-bye.
It's a very, very, very fine house.
Bye, guys. Take care.
Cats and